As soon as we invited institutions, we got the ETFs, we got the ETPs, we got the money markets, we got the derivatives, and everything came in on blockchain. It just invited Wall Street. So this is Wall Street 2.0. Welcome to the game. Welcome to the party.
It's Monday, July 15th, and this is Markets Daily, a show where we get into the minds of some of the most experienced and smartest investors, traders, CEOs, analysts, researchers, and anyone who has a hot or smart take on the markets. Now, before we get into today's discussions, we have to take a look at what's going on in the news this morning. Bitcoin is retaking $62,000 after the attempted assassination of former President Donald Trump over the weekend. Assets linked to the Republican candidate's probability of winning are now seeing renewed volatility, with Trump-themed PolyFi tokens surging as well. In recent months, as we all know, Trump has embraced crypto in a bid to win over the supposedly single-issue crypto community, seeking a friendlier regulatory environment for the industry here in the United States. Joining the show now to unpack the markets and unpack the event that happened over the weekend is the CEO of Discover Crypto, Josh. Josh, welcome to the show. I was on yours, now you're on mine. It's like a whole thing
It's
we
been a
got going
while. I
on
feel like
here.
we haven't seen each other since the TikTok days, so it's good to be back here.
I know. All right. Now, we got to take a look at the markets in context of what happened on the weekend. Of course, we know that former President Donald Trump was shot at an attempted assassination over in Pennsylvania. Talk to me about how you are making sense of what happened, and let's just start there. I think we have to start there. We can't relate it to the markets just yet.
Yeah. Yeah, I think, all of America is still trying to figure out and make sense of what happened. There's a lot of political division that this is, of course, spurred up in the last 24 to 48 hours. And I feel like, most of America probably hasn't even slept on the overall situation yet. So, of course, this week we have RNC with Donald Trump coming out and speaking what was supposed to be Thursday. There's now conversations around him speaking out, maybe even later today, if not tomorrow, of course, to address the nation with the overall attempt that did occur. Now, in terms of how this is overall affecting everybody, I think we don't ever want to be too premature in the conversation of what actually happened, right? I think everybody needs to keep an open mind and realize that this isn't the first time in history that an attempt like this has occurred. And of course, we're going to be talking a little bit in this episode on what this relates back into, even JFK and earlier with Ronald Reagan. So there's a lot that needs to break down. There's a lot of investigation that still need to be had. There's a lot of suspicious events that actually occurred. And of course, I have my questions, but I think right now, America, what they just need is a little bit of a level-headed situation and conversation around, okay, now both parties are spreading conspiracies like no other. What's the truth behind this and what's the path forward for our politicians in this election?
Yeah, I think a lot of people have many questions that are yet to be answered. We don't know if we'll ever get the answers that folks are looking for, but we'll just have to wait and see what happens. I know you mentioned America's history there, Ronald Reagan, JFK. If we turn and look at this news through the lens of the markets now, talk to me a little bit about some of the similarities and differences when events like this have happened in the past and how that's affected markets.
Yeah, well, what I would like to first note is pretty much the only presidents that really have had an attempt against them and that have been successful. I mean, these presidents are people that looked at the Federal Reserve and entities such as the military industrial complex as a threat against not only our nation, but democracy as a whole. And so, of course, in 1963, we saw that with JFK. That rolled into another presidential candidate that seems to not, be talked about too much this cycle, unfortunately, but his father, RFK, as well in 1906, being taken out for a lot of similarities. You can go back to Bay of Pigs and everything that led up to those events. But specifically with Ronald Reagan, it's going to be about the polling numbers. I mean, Ronald Reagan has a lot of similarities to Donald Trump. This is somebody who was an actor before president, and, his polls and ratings skyrocketed after the attempt on his life. So I expect big similarities to come out against Trump's campaign. And we're seeing it on things like Polymarket. Now, polls have been historically, I guess, if you guys have at all watched the election, I know this is the most famous election to date, but if you're watching, of course, back in 2016, even 2020, polls, said one story. And then when the actual time to vote came, it completely did the, opposite of what the markets expected. And so, I think Bitcoin's price actually is going to be the pull from this. And I know that sounds probably crazy to a lot of individuals that might not be looking at this from a market perspective. But you brought up a really good point. So the Republican Party has a very positive reaction to overall regulatory approach in the crypto scene. The Democratic Party has been very anti-crypto. In fact, has established anti-armies with individuals like Elizabeth Warren, who ran against Joe Biden in 2020 and just did it honestly to pull votes from Bernie Sanders. So they owe an incredible a lot to amount of voting perspective and just reasoning behind the positive direction of the Democratic Party in 2020. So her leading an anti-crypto army and seeing just kind of rolls over and shows what the overall vision and perspective of the Democratic Party has been the last 4 years. Of course, you have the executive branch instating people like Gary Gensler, who I feel like's wasted more tax dollars than any SEC chair in recent history. I mean, this is somebody that's placed lawsuit after lawsuit after lawsuit, met with Sam Bankman-Fried, a dozen times, and has really not protected any investors in this entire cycle. So when you see Bitcoin break out, and I mean, we're talking a massive percentage gain in the last, 24 hours. I think a lot of this just comes down to the market sees this as a very positive direction, as we're finally going to have a cabinet and a party that supports the initiatives of Bitcoin and crypto.
It's interesting you say that and you bring up Polymarket because it seems like the bets on Polymarket and Bitcoin are a little correlated in the past, I don't know, 24, 48 hours directly after the events. I believe that former President Trump's likelihood to win the election in November pumped up to 70%. Of course, we saw Bitcoin is up at $62,000 this morning, or just above $62,000. Do you think we're going to see that correlation continue? Should we be watching polyfi tokens? Like, what should we be watching to kind of gauge what might happen in November, in your opinion?
To me, it's honestly comes down just to tokenized markets. So a lot of
Hmm.
people have been hearing about real world assets. It's specifically tokenizing treasuries in our money markets. You've been seeing institutions flood into this space. You have Goldman Sachs announcing that they're going to be launching 3 different tokenized initiatives. You have BlackRock with, of course, BIDL, the largest asset management company in the world. But something that really nobody's starting to talk about yet, but I think it's going to be a huge discussion around this election cycle, is the need for accountability against our politicians. No one trusts, the Biden administration or the FBI or the CIA or the DOJ to come out and actually give a very transparent, trustworthy explanation of what happened at this event. We don't have any historical reference as an American to look back and say, hey, they did the right thing here. And if they did, it hasn't been publicized enough, because the main events, the main tragedies that have existed in America have, just destroyed that trust between the American people and that establishment. On the other side of the spectrum, you have, agencies like, of course, the Pentagon here, missing audit after audit after audit. You have politicians inside trading every single committee, and you have both Republicans and Democrats that are all, using information the public doesn't have to make amazing trades. There should be no world of reality where our politicians are the top traders in the stock market, let alone the crypto market. They're now starting to do it. We saw that with some recent senators that were trading even altcoins. And so, I think tokenization is only going to ramp up. It holds accountability, and it's a way for institutions and the government. And I truly believe since 1971, when we came off that gold standard, it allowed institutions to print endless amount of money, of course, privately with the Federal Reserve. And that created this kind of kleptocracy that we're in today. And so, these institutions, if they're working together, you have a lot of BlackRock advisors. It's a revolving door with these political committee members and these, congressional members. The only way out of this to get trust back is by tokenizing and adopting blockchain. They have no option. And we're seeing that pivot and that curve take place right now from the current status quo. And it's already been rolling over into the Republican Party for the last 4 years. So I think tokenizing that market, and you've already seen it. If you look at US Treasuries, a great website is called rwa.xyz. It will list out all the tokenized treasury markets, both crypto and non-related to crypto, just using private blockchains. It's up month over month exponentially since January. I think it went from about 100 million market to almost $2 billion, and it's expected to double by the end of August. So I think that is very clear. It's the need for transparency. It's a need for, tokenizing things and bringing things on blockchain. I think it's the only pathway forward.
Let's talk a little bit more specifically about your investing strategy right now. If you were to allocate a portfolio this morning, given the events that happened over the weekend, what would you be looking at?
Yeah, I think that's a great question. It would be hands down infrastructure. So what's behind this solution? So how I look at this is the solution to fractional banking. Bitcoin and crypto, They aren't separated. As soon as we invited institutions, we got the ETFs, we got the ETPs, we got the money markets, we got the derivatives, and everything came in on blockchain. It just invited Wall Street. So this is Wall Street 2.0. Welcome to the game. Welcome to the party. But ultimately, it'd be focusing on the infrastructure. And what I mean by that is, of course, things like Ethereum. Bitcoin, obviously, as a whole, is a heavy position in our portfolio. But Ethereum is what's building a lot of these smart contract protocols. On top of that, you need Oracle providers and cross-chain providers like Chainlink. So I'm looking at the players in this game that are going to be providing all the data and infrastructure for this new system that is being built on. Of course, that's Ethereum, that's Chainlink, that's Bitcoin, that's tokenization plays. One of the most, I think, beneficial ones out of this has been Ondo Finance. They're a huge reason behind the success of Biddle and BlackRock's initiative. So it's, large caps, but I think, a lot of people over the last 2 months, we've been huge advocates for this. Markets have been down 60, 80, 90%, right? You don't want to come into these markets when everybody is greedy. Everybody's, excited to hop in at 72,000. You want to be looking at the infrastructure plays that are really going to benefit from this change in society. And I think that's tokenization hands down.
You just mentioned you don't want to come into the markets when everyone is greedy. I know that you watch the Fear and Greed Index closely, and some people are kind of skeptical at the Fear and Greed Index. They're not sure how to make sense of it. Why is the Fear and Greed Index something that you watch when you're thinking about your portfolio?
Yeah, I think the only ones that don't like making the sense of the Fear and Greed Index are traders that are trying to do, I call it brostrology. They're painting
Astrology for men.
They're painting Van Goghs on their charts, and they have a bajillion different lines. And, at the end of the day, I think markets are just very simple. We follow the KISS method, which is keep it simple, stupid, right? It's very simple at the end of the day. You don't need to go buy a $500 course. And the Fear and Greed Index simply shows you the current state of the market sentiment from retailers. We're the ones that are emotional, guys. Institutions, they look at markets and data as ones and zeros. And we look at that as like a roller coaster of emotions that we just continuously want to play. So,
guys need astrology
it's simple.
too.
Yeah, exactly. And what's really cool though about the Fear and Greed Index, because we've built our own tools now and have our own Fear and Greed Indexes for our audience, but is if you look over the historical data, it is very accurate. Now it doesn't correspond to the exact top and the exact bottom, but it's pretty dang close. If you were to sell every time you're at a 70, 80 greed level, for viewers watching it, it's between 0 and 100. If the closer to 100, it's the greedier it is. And so if you were to take profits or sell at that 70 or 80 range, and then dollar cost average and buy heavy under the 20 range, which is when everybody's scared, you would historically be up exponentially on your portfolio. So yeah, I think it's one of the greatest tools out there, and I think it's very easy. It just monitors people's fear and emotions in the market.
You mentioned something that I want to come back to. You mentioned us in this like Wall Street 2.0, and I ask this question a lot, but I think that you might have an interesting answer here. Do you feel like we're replicating some of the same systems that we've been trying to change in this industry with the advent of tokenized funds, ETFs, ETPs? Just curious your thoughts on, as the industry matures, how you think it's going to progress, and is it going to be kind of like one and the same with Wall Street, and ultimately, the problems that the Bitcoin white paper set out to solve might not be the ones that we're actually solving?
Yeah, I think we lost those hopes back in 2012, 2013 when Ross Ulbricht was originally, taken to prison and they shut down Silk Road. That was the first, okay, government's coming in. They don't like what we're having, but they're now interested. And so, but I think to your point, yes, 100%. This is Wall Street 2.0. I like to say my favorite line is decentralization, simply a masquerade. It is centralization disguised as this new marketing perspective of decentralizations against the system, like, for the people, when in reality, it's the system using that marketing initiative. So ETFs, ETPs, all these things releasing, they solve, the double spending problem. They solve, pretty much every governance model that exists in the regular institutional markets. It allows institutions to trade 365, 24/7. It allows to unlock derivatives markets. It unlocks, billions, if not trillions of dollars in capital. And when you look on the back end, again, go back to the infrastructure. So retail, when they come in, the reason why we're emotional is we're chasing the next hottest narrative, the next, shiny meme coin, or the next AI narrative, or the next, you remember FitFi when everybody's like, oh my goodness, running on chain is going to be, end all be all. We're all going to get fit and rich. That
Yeah,
didn't last
totally.
very long.
That's the dream, right?
Yeah, run on a treadmill and make money. That didn't last too long. And the reason for that is a very retail perspective on the industry. How institutions look at this is just it's a numbers game. It's a sums game. And again, it's going back to ones and zeros. And what they see is an industry that allows them to invest into the back end. And in this case, look at BlackRock. They manage USDC's stablecoin reserves with the platform called USDXX. They make money pretty much as USDC grows, they make more and more money. They're invested into their Bitcoin miners. They're invested into Coinbase. They're invested into Circle. They're one of the leading providers. And now you see even their Bitcoin miners they're invested into, like Marathon launching Bitcoin layer twos, which means now miners not only are they making money off the mining on the back end, they're making money off the mempools and the transactions occurring on the actual network. So to me, it's a way for institutions and the traditional systems to just make even more money 365, 24/7. It's a no-brainer.
Yeah.
That's why the adoption's coming from their side.
I want to bring it back to retail now. How do you decide when to invest in something like a meme coin or an alt?
Yeah, meme coins, I think, is you decide as much as you go to Las Vegas, So if you're looking at the meme coin market, I'd like to say, meme coins are 3% of the overall crypto market. So your portfolio should probably never be more allocated than 3%, as that's the overall size. But I think they're great for adoption, right? There where a lot of
Hmm.
retail usually enters these markets. But for retail right now, it's really start research. What are the upcoming trends? To me, that of course we've talked about tokenization enough. It's also going to be AI again. I think there's going to be another huge AI boom and spark with Sora and the integration of iOS 18 and OpenAI. You have every single doesn't matter if it's video editors or sales agents or anybody that wants to be more efficient than their competitors, they're going to have to upgrade all of their devices and services with this new upgrade to the iPhone. So you can't have 13s, 12s, 11s, etc. anymore. So that's going to create, huge demand in Q4 this year. Of course, I think specifically around the release of the new iPhone and all their new devices. But Sora, we saw what happened with, physical infrastructure and the need for it when we had ChatGPT release, which was a text model. It's a large language model. Now we're taking text to video. So the amount of rendering and data storage that we're going to need with the release of Sora, I think is going to be something that the markets aren't even ready for because they don't understand what this actually means. I mean, you're talking about integration in the movies. You're talking about, I come from a video editing background. The video editing, the text the video could do is way better. You're going to really use that as an editor if you want to get ahead of the curve. And so I think that can create a new demand for, the AI and deep in sector. And I would simply just diversify into whatever industry you think are going to emerge out of these markets over the next 2 to 3 years.
Well, talk to me about how you decide which AI tokens to invest in to make a bet on these, because we're talking about ChatGPT, we're talking about Sora. These projects don't have tokens; they're not like crypto native projects, but often we see investors grabbing AI tokens to make a bet on the AI sector. Is there a disconnect there, or how do you think about which tokens you're going to invest in to make a bet on this thing that's happening outside of crypto?
Yeah, I mean, of course, a lot of research on our end comes into finding the ones that have involvement with these infrastructure plays. But at the end of the day, I keep it very similar to how, these venture capitalists are playing the game. They're the ones that make the most money. So I want to kind of follow their play strategy. And that's if I'm going to touch the AI sector, I'm going to look at who are the biggest players. And I separate the portfolio by 50% is going into pretty much the largest caps. So, for example, the biggest one that's coming out is going to be ASI. That's a merger of Ocean, Ajax, and Fetch AI. Now, we're not in it yet because historically, when there's a big event like this, a big merger, it tends to be buy the rumor, sell the news. But for example, that's a token that would be a top 20 project by market cap. So for example, that or Render or Near, those are very large market cap projects that already have a really big name for themselves and have crafted around this narrative. We're allocating into some of that, right? That's about 50% of the positions. 25%, and then we go a little bit riskier, right? We want to go into the top 50, maybe top 200 market cap tokens. You're looking between 500 to, $2 billion in market cap. What you're looking for in here isn't the copy pasta. And what I mean by that is when you saw ChatGPT release, we saw hundreds of AI tokens come out and we're like, we're the decentralized version of ChatGPT. And then ChatGPT 3.5 came out and all those became irrelevant. And then the next wave came and then 4.0 came out and they all became irrelevant. And the next wave came. And so, what we're looking at there is going to be who are the ones that are really, really benefiting off the infrastructure, the DePIN category. Those are going to be rendering platforms. Those are going to be storage platforms. Whatever it is, that is where we're allocating. The last 25%, that's where, we're starting to allocate. And by the way, this isn't like one or two projects in this 25%. We're taking that last 25%. You're going to see a wave of a ton of new projects established with the rollout of Sora. And I believe with this next trend of the text to video. So when that happens, it's a number sum game at this point. We're not looking to, buy one and be like, oh, this is the next Amazon. No, we're looking for quick flips. And so we're going to be allocating probably to 5 to 10 of the new products that do release around that given time. And I have a feeling there's going to be around the side of the rendering aspect with the text to videos. So that's kind of how we separate it.
All right, Josh, and just before we wrap up, I got to ask you, anything worrying you about the markets right now?
I don't know where bears we're coming from. I mean, if you look at almost every metric across the board, we have a presidential candidate that now very clearly, historically, is more than likely, going to win this race. Again, if you're relating back to Ronald Reagan, it's been 40 years since we've had a president shot at like this, an attempt on his life. So I think that's already very, very positive moving towards elections. But let's look at this from just an on-chain data perspective and just institutional. We have the ETFs for Ethereum releasing. We now have Bitcoin spot ETFs that have done. They're one of the best performers in ETFs historic, like on the stock market today. There are billions and billions and billions in inflows. Your institutions are expecting 33% of that same amount of volume to flood into Ethereum. So I expect altcoins to honestly provide pretty well. From a liquidation standpoint, from an oversold standpoint, all the levels we're at right now and where we've been sitting are at like FTX lows. And now we have institutions in this game. So it's very clear to me that retail is the ones that were panicking around that $53,000 level. And I don't know if we'll see that 46 or that 51.5 like a lot of people were hoping for. But what I do expect and what I do understand is from a user adoption on chain, everything is up and to the right. And so for me, no, it's, I'm buying Bitcoin. Bitcoin's here for the long term. And I'm going to take advantage of all the trends and all of the new information that is released over the next 3 to 6 months moving towards elections with this crypto market.
Josh, it was such a pleasure having you on the show this morning. You are welcome back anytime. Thank you for providing that insight.
Thanks for hosting us.